So, Louis,
Hi.
this is our first property market of the year.
Yeah.
How would you describe the market at the moment?
God, you always start with that question, and it's always, I think, for the past year or year and a half, it's going to be the same boring answer, which is not very much has changed. I mean, on a quarterly basis, things tend not to change very much, but I think really, given the climate, the conditions we've had, not just locally but also worldwide, things are pretty slow, pretty variable. Uncertain is a word that we've obviously used quite a bit over the past couple of years because of the agreement. Now, obviously, that's pretty much very much in play. We had expected that things would move to more positive results post the announcement back last summer. But actually, I think we were the ones that had said things weren't going to happen immediately. And that's very much the case. I think really ticking along is the phrase I would use. We've started the year surprisingly well. Not to say that last year wasn't a good year, it was a good year, but again, much in the same vein as I've said, it's been a slow few years, and that's still very much the case. It's the mood. I think the mood is still a little bit nervous. So yeah, I think we certainly still have those positive expectations moving forward. That hasn't changed, and I think the dynamics, which I'm sure we'll talk about now, insofar as the potential that Gibraltar has and that it offers, is very positive. But at this stage, chugging along.
So, I do remember actually from the last conversation we had, you did say that things like the treaty, we're not going to feel the kind of the benefits or the impact of it immediately. It's a bit of a slower burn. With things moving along so fast, and in fact this week we've heard that April is a date that possibly things could start changing at the border.
Yeah.
Do you expect that to have an impact on property?
I think all those things are positives. So I think, the announcement last summer was a positive. Did it have a direct impact? No. There are many other factors surrounding the agreement, and bear in mind the decrease or the realignment that we call that's happened in the market over the past couple of years since the peak of 2022 isn't driven solely by the lack of an agreement or one coming through. There are many other factors, volumes on the market, confidence in the market, what's going on around the world. I mean, one of the main reasons we've seen the realignment in the market heading downwards, if you like, over the past couple of years has mainly been the world crisis, interest rates, inflation, those things seem to be settling, but the world recently seems to have gone even crazier, and therefore all those things have an impact. But I think anything that relates to Gibraltar insofar as the key element, the agreement obviously being the one, or the biggest driver, if you like, for confidence, is going to be good. So the announcement that's come through insofar as the electronic entry points, etc., into Gibraltar, I think that is only a sign that things are happening, and therefore with that happening, that confidence element from people looking at Gibraltar from the external into Gib will be a positive sign for sure.
I think it just shows there's a momentum. There's almost like a fixed deadline or something that we're working towards with the border. That's close to home, and you touched on some of the global effects or global things that are happening. We're all watching the news. Like, how much does the news and what's going on abroad have an impact on our property market?
I don't know, but I would say at a guess, I think hugely. And I think, it brings me back. I was talking to some clients recently to the crisis and the credit crunch of 2008. And I think, historically we've seen, economic cycles. The one previous to that was 1989, 1990. We then waited 2008 for the next big crash, so to speak. And I remember at the time talking to some clients because in fact, the reason I mention this is because there are some similarities insofar as the mood. There are some similarities insofar as how, as a business, we are approaching clients and talking to clients. It's actually hard to call clients and say, hey, let's buy some properties, speculators or investors. And that mood, that feeling that I have when I'm calling clients is similar to 2008. Now, I don't want to say in any shape or form that we're going to see a crash in Gibraltar, because actually in 2008 we didn't see a crash. It affected the world, which actually leads to the question that you made, and what we're seeing happening at the moment, which is nothing short of crazy, from a political, geopolitical, and economic perspective, in what we're seeing. But in answer to that question, the mood that we have, if you like, generally is similar to 2008. And the one example I wanted to give actually was one of the clients that we'd been working with for a while, who is a trader actually, based in Gibraltar, had bought various investment properties, and we were talking about the possibility of looking at some others. And he mentioned to me at the time when I'm talking to him and pitching him some properties, I think some of them at the time were in ragged stuff. And I remember distinctly because he stopped me in mid-conversation over the phone and said, "Louis, just give me 2 seconds." And it just went quiet. And about 5 seconds later, he came back on the phone and said, "Something has happened to me that has never happened in my trading life." And I said, "What?" And he said, "My entire screen has gone red. If you think I'm going to buy a Mars bar, let alone a property now, you've got another thing coming." Now, I don't want to frighten any viewers in any shape or form, but what was interesting was that the mood in that day and that period had an impact in Gibraltar. Interestingly enough, the economy in Gib was actually doing okay. Well, there were similarities in that there was oversaturation. There were a lot of properties at the time on the market. In fact, I remember we were doing King's Wharf Phase 1. So I think long answer to your question, but in trying to do a short answer to your question, there is certainly an element of nervousness, lack of confidence, driven by what's going on externally, particularly when we're trying to bring a lot of external clients into Gibraltar. Now, it may not have anything to do with Gibraltar as such. It's just generally what's going on around the world. It's difficult to go to people who are outside Gibraltar, who may be very seriously considering Gibraltar,
might not understand the differences,
and say, "Come over," and they say, "Look, we really want to, but hang on a second, do you watch the news?" And I think, that is the key. Are we watching the news? Most people are. And you're looking around thinking, Christ, it's a pretty scary time out there. But that then leads to the positives of, where Gibraltar will always
I
do
think
well.
so, absolutely. And you mentioned the similarities there. So some of the conditions and definitely the mood. But what feels different now to 2008? What feels different?
I think not much, but learning from 2008, and this is the point, at the time it was like, this is the end of the world, but actually it wasn't. Gibraltar suffered for a few months, and it wasn't economically driven, because if you look at the GDP figures, economically Gibraltar grew in 2007, 2008, 2009. The blips that we had were external. So I think if there's anything to learn from is, let's not panic, because there is so much that Gibraltar has to offer. It can't happen overnight, and we keep on going over the same thing. The agreement's here, why aren't things happening? It's not going to happen overnight, and external factors are playing in. But also, time will tell. And I've always said, let the market, so to speak, drive the market. We have some fundamentals at the moment which, other than the externals, are also affecting the market. And I think the volume of property on the market is one. There's a lot on the market. Going back again to 2008, we had a situation then where the volumes were pretty high insofar as what was available. If you look at volumes on the market at the peak that we last had of 2022, so 2019-22, we saw that growth in the market of between 50 and 100%, which I keep on saying over and over again in every podcast, but it was such an impacting period. And obviously, that peak that we saw in 2022 led to us having, given demand, around 50 to 60 properties for sale on the market. Now, I would say, are one of the bigger players. We haven't really been involved, as you know, in studios too much for the reasons we've discussed before. We may discuss again. But generally, that was quite low. To give you an example, today there's 230 to 140 properties that we have on the market, and generally, overall in the market, there's over 600 properties in the market. That's a lot. Now, Some of that volume is driven in the main by, for example, a lot of studios and small one-bedrooms, of which we've seen a lot being built recently. And it's one of the things I've said to you before. What's interesting in the market is that there are segments in the market that are doing very, very well, not so well, and very badly. And I think that's driven by the amount of availability within those segments.
So, on that question, what are the market sectors that are doing well, and why do you think that is?
Look, I'll give you an example, which I think I gave previously, but very much relevant to this month. This month we've actually started the year very well, so we're pleased about that. And it's interesting, I say we started the year very well, and it's been a good month, but there's still nervousness.
Yes.
So it's interesting that we say, oh, well, we're doing really well, it's great, fantastic, we couldn't have hoped for a better start, and it's been a great start, but you still feel this nervousness, which is quite interesting. So where we felt that things have been quite good, again, has been based on areas where there is a lack of demand, and there is a lack of supply, and there is demand. It's mainly been in developments like, for example, Midtown, Ragged Staff, King's Wharf.
So these are owner-occupier, right?
Owner-occupiers, larger properties, 2, 3, 4 bedrooms. We've been successful in doing that. And again, it's the profile buyer. These aren't buyers who are speculating. These aren't buyers who are buying on the basis that they foresee where Gibraltar may or not be in 2, 3, 4 years' time, or where that isn't as important to them. These are people who are here, have been here, want to remain being here, and actually external factors, politics, the economy doesn't really bother them. They just need to buy and want to buy a property. And I think that's quite interesting. And then obviously there are other segments where there's just a huge oversupply, and that's affecting prices and how they're selling. I think also the very, very high end of the market is interesting. And we went through a similar period, I think, in 2013-14, where we saw, I think, what we coined as the fourth tier in the market.
The ultra
high. Because, we've been through, if we go back 25, 30 years, which is when we started, back then we really only had two levels, lower end and middle end. As the economy and as Gibraltar's grown, we've enjoyed a third tier of the market, the high end. And then I felt that by 2012-13 we were seeing that really high end, which at that time was dictated by a price of 1.5 million plus. Now that 1.5 million plus price range is now high level as opposed to ultra high. So I think the ultra high level, which came into play in a big way 2012 to 2014, then slowed down dramatically because of 2016 and the Brexit, etc. That kicked in quite well 2019, 2022. That, I think, at the moment is in a bit of a stale position where not very much is happening. And again, for reasons that the clientele looking at that sort of level are people who like Gib, want to be in Gib, but have those uncertainties still, and more importantly, are obviously not in Gibraltar, are based around the world and have concerns of what's going on around the world anyway.
So I guess is it right to say then that the investor side of the market is tougher?
Yeah. So the investor side, the speculative investor side, very much so. And I think that's also driven by the fact that, for the past couple of years, you've been able to get more of a return out of a fixed deposit account than you would do out of buying a property and getting a yield on a rent. Yields on rentals historically have been only between 4.5% and 5.2%. When we saw the slowdown, interest rates being affected, inflation, etc., we saw that the yields were coming down, but not only were yields coming down, interest rates going up were starting to become attractive for people to actually say, I'll hold on to my money, put it in a bank, and I'm going to get a far better return net than I would do out of investing in a property. So that also has had a steering insofar as what the market's doing, and therefore less people looking to buy from a buy-to-let perspective, because there's that. Now, it's interesting that we, and I don't want to be negative all the time, there are still people buying. There are again, talking to a client recently who works for a family office, and they're actually investing in London. And you think, well, hang on a second, why? London, Labour government, they're in a bit of a disaster economically, loads of people leaving, loads of the high net worth individuals leaving. We're seeking to hopefully attract some of these high net worth individuals who are leaving the UK for the obvious reasons. And the answer was actually, London will always be London. So no matter up or down, it will have its peaks and troughs, and it would have its economic and political insecurities and downturns. But London will always be London, and therefore the view taken is now might be the right time to invest in the right products, because we're getting bottom line values, and we can only hope and seek to see those grow, because London will always be London.
So if London is always London, could that sentiment be?
I think so. Well, I
Gibraltar?
think when you look at GIB, in the way that it's grown, and we've seen this, and I certainly have. Without declaring my age too much, but I think I may have done so in the last program. But GIB has that. GIB is, if you like, has the dynamics of a mini London. The financial services, gaming, etc. It's small, English speaking, English legal system. I've always said for the past 25, 30 years, it's one of the things I've always signed off with articles I've written, etc. One of the key points we have and we underestimate is we speak English. Yeah. We have an English legal system. We have a very well-regulated financial services system. It's something that people trust and are attracted to. So in answer to your question, it's really where I was leading to anyway, so thank you. Yes, London is London, Gibraltar is Gibraltar, and I think there's a lot to be said for that. And I think that, again, is something to be positive about. So, nervousness, moody, if you like, variable, but I think opportunities are there, knowing that we are slowly coming out of this, knowing that the world is in mayhem, crisis, and knowing is something that we've always said before as well, where the world is in crisis, places like Gibraltar tend to do well.
I think this is it. I think Gibraltar trades on its stability and its ability to kind of, ride out some of these global things. What you mentioned there, you listed some of the benefits of why someone would move here or invest here. Brings me back to the government's recent residency pause. Yeah. How has that pause or slowdown affected the market?
Yeah. Well, you just named another element which has affected the market. Look, from an estate agent, I think we did touch on it in the last podcast or videocast, whatever you call this. But from an estate agency perspective, it's terrible news. The fact that you could be dealing with someone, and because that person can't get his residency or residency guaranteed, therefore will not even rent, let alone buy, is a huge concern, and obviously has a negative impact on the property market. Now, that's not to say that, as I've said, we've done well and we are seeing properties selling, and those properties that are selling, as you rightly mentioned before, are owner-occupiers, people who are here, people who can do. It's important that we continue to attract people, and that's new residents. I'm not going to delve into the intricacies and the criteria, because I'm not even sure that government has that finalized at this stage. But when it happened, as much as it was deemed as not good news by us, of course, as a Gibraltarian, I got exactly where government's coming from. So I'm going to get shot at by some people, but generally, I get it. I get what government's concerns are about, the reason behind it. And it's mainly driven by the fact that the agreement and what it will hopefully do is so huge that I'm not quite certain that even those orchestrating it, if you like, are fully aware of how big an impact this agreement will be on the economy in Gibraltar, and thereby on the demand that we might have and the attraction that Gibraltar has in people saying, hang on a second, I'm going to go and live in Gibraltar. Now then we've got issues of education, healthcare, all of these things, benefits that we as Gibraltarians have and we want to continue to enjoy, and how a huge influx of new population, if you like, an increased population will have on those benefits. So there's that balance. We've talked about Monaco before and how that plays out. You know, does Gibraltar head towards the Monaco model? I think it has been doing so in a different way, but it has been doing so already. This agreement, I think, to a degree, steers us more towards a Monaco model because of the potential clients who are going to be attracted by Gibraltar, and those are going to be high net worth individuals. In the main, there will obviously be many companies that will continue to want to be based in Gibraltar because it's a great place to be in, particularly with an agreement in place. And therefore, I think government has to be cautious and is being cautious with how they bring that into play.
They do seem to be changing or tightening up some of the rules or around residency, but it feels nebulous. Like, are you hoping for more clarity?
I think there will be, and I think there will be clarity very, very soon. I think, you know, if we just look at, for example, the Cat 2 status, which historically has been along the lines of if you've got a net worth of 2 million, you can just jump on and become a Cat 2. Just to point out, 1% of the UK is worth 2 million. So I don't think we can afford to have 1% of the UK potentially knocking on our doors and saying, we'd like to become residents. So that alone would lead me to believe that the criteria for Cat 2 status has to change dramatically. I would imagine it will be upwards of 5 million. I would imagine it will also be not 5 million of net assets, but rather 5 million of investable money. It's very easy to say I'm worth 5 million because I've got a property worth 4.5 million. So I think there's a lot of these things that come into play. Now, in bringing those things into play, we're doing so because we know we've got an incredible card to play. That card being an ID card that you get if you become Gibraltarian.
Literal card.
Literal card. And therefore, I think there's, you know, if it plays out that way, I think we can look forward to seeing a higher degree of higher value people of good profiles coming into GIB. I remember many years ago when I think the criteria for insurance companies setting up in Gibraltar, captive insurance companies, etc., was increased substantially. And the concern by the finance centre at the time was, are we going to lose companies? Are we going to lose these insurance companies who have been used to this criteria and we're just, you know, raising the bar, so to speak? I'm speaking sort of, you know, sort of as a more or less, but that as an example, if you like. And actually what happened is they ended up getting higher quality clients coming through. So I think the potential for that is very real, particularly if we're raising the bar, and particularly where you've got a lot of people who can then see Gibraltar as a certain stable place to be in, English-speaking, English legal system, etc., thinking, well, this is a great place to be in. Now, let's not be fooled. We're not Monaco, we're not Singapore, we're not Dubai, but we don't need to be either. Yeah. There is, you know, that sort of profile of which there are many people who I think would be very interested and attracted to come to GIB, and they continue to be so. The fact that we've paused it isn't great for us now, but I think there needs to be an understanding of what it is that we've got. Likewise, with normal individuals coming in, people will still need to come to Gibraltar to work in Gibraltar for all these companies. How does one play into that, and how does one give them residency, on what terms, etc.? I think those are things the government are very conscious of and very conscious of being careful with, because at the same time what we don't want is for that to have an impact on what Gibraltar has been used to insofar as its education system, insofar as its social service system, its healthcare, etc. So and again, to cut it short, as much as it's been a concern for me, I get completely the reasoning behind the pause, the thinking, and hopefully the delivery of what will be the new criteria for residency in Gibraltar.
We've been talking a lot about some of the challenges, domestic, external, things with process and applications, etc., that might be affecting mood and sentiment. Looking ahead, what needs to be lift for the sentiment or the market mood to lift?
Everything that we've just discussed. No, really, it's it's funny because it's even talking to you, everyone's sort of thinking when's it going to happen?
Yeah.
When's it going? Why isn't it happening already? It's not going to happen overnight. And actually, when it does happen, it'll be, oh my God, it happened and we've just missed it. We'll be in that sort of. I just think we've got to believe in what we've got. We've got to believe in what we've achieved so far over the past 25, 30 years. Who would have said before 2016 that Gibraltar politicians would be negotiating directly with politicians in Madrid? I mean, it would have been unheard of. And here we are, having set up and agreed an agreement with politicians in Madrid, with the UK, with the EU. So I think there are all these things happening which are massively positive, and they will come into play. I just don't think we can force it. And it's a bit like generally the market and the over-saturation and the overpopulation of certain segments in the market. We're almost trying to force things to happen, and the more we try and force them, the more negative the reaction we might get. I'll sound boring again in saying, let the market drive the market. Let's also understand that we're not in terrible shape, in any shape or form, but the market is realigning. The market is finding itself insofar as where it ought to be in certain segments. And I think the agreement itself, and I was talking to some people this morning about it, different businesses in Gibraltar are concerned about how well or not they will do. We still don't know. I mean, we've got some basic understanding of these things. But and I don't think we'll know even the moment it's signed or ratified. I think it'll take time to see what segments are going to do well, what segments may need to change, etc. But I think we just need to be patient.
That brings me on to, I think we're reading each other's minds today, because I wanted to close today's discussion with some quick fire questions. First one was, right now is the market more about patience, positioning, or preparation?
Patience and preparation.
Okay. Are we closer to the end of uncertainty, or are we still working through it?
We're working through it.
Does 2026 feel more like a turning point or a consolidation year?
Both, because I think that from a Gibraltar perspective, very much a turning point. From a worldwide perspective, very much a consolidation position. For sure, I think the world is, and again, what do I know? But my view is that we're gonna see. There's a lot to come insofar as geopolitics and the economies around the world.
There's a lot outside of our control, but when confidence starts to return again to our local property market, do you expect it to come quickly or something that will happen slowly?
I don't know. I think in certain segments maybe quickly. In other segments, maybe slowly. For example, very, very high value clients, the ultra high, may take its time, but when it happens, it'll happen. I think the middle to high end, which is already there, I think that might happen quickly, and we may even see that in 2026.
Yeah. Last question for anyone watching us who may be unsure as to how to enter the property market, whether to sell, buy. What should they do?
Don't ask an estate agent, because they're going to say to you, buy. Take good advice. Okay. Take good advice. I mean, look, the reality is on anything, and I think the biggest mistakes we've historically made is sometimes doing things quickly, rushing into anything. So take good advice. Take good advice and understand why it is that you're doing it. There are phases in life when one wants to invest in property or speculate into property. Understand that moment. Understand where the market is with respect to that space. If you're buying because you want to buy for your home, understand what it is that you can afford, what your aspirations are, where you might be economically insofar as your job is concerned, etc. But I think most importantly, take good advice.
So I think that's an invite for anyone to listening to reach out to you, right?
We're not the early estate agent in Gib. Yes, of course, we'd love to participate and help people and advise people. And I think that's one of the things that for us is important, and we've been around for 25, 30 years. We may not always say what we think you want to hear, but only because we want to be here for the next 25 and 30 years.
Anyways, thank you for your time.
Thank you.